For joining us. Oh, we're going to be recording this, as you just heard. And my name is Nadia Villagrán. I'm the Vice President at Local Initiative Support Corporation and the Director of Rural LISC. And I just appreciate everyone's participation in this policy discussion. Thank you for joining us. On behalf of Rural LISC, I'm excited to welcome you to today's discussion on policy advocacy. As many of you know, Rural LISC has always been grounded in partnership and listening and pursues listening closely to what our network needs and responding with tools, resources, and capacity building that strengthen your work on the ground. Last year, we conducted a national survey and spent valuable time together during 11 convenings that I hope you all were able to attend or heard about and appreciated the conversation. We heard directly from you about the challenges and opportunities you're navigating. You were clear. You want more engagement in policy and more opportunities to build knowledge and confidence in this space. So today's webinar is a direct response to that feedback. It reflects our commitment to strengthening rural voices, supporting your advocacy efforts, and ensuring our network is equipped to navigate the policies that shape local progress. Again, thank you for being here, and thank you for the work you do every day in rural communities across the country. I'm lucky enough to be joined by two incredible leaders in this policy advocacy work. First, I'll introduce Mark Kudlowitz, who's the Senior Policy Director for the LISC team. Mark is an advocate for federal policies that support LISC's national priorities, including affordable housing, rural development, community development, financial institutions, and equitable transit-oriented development. Before LISC, Mark worked as the policy director at the United States Department of Housing and Urban Development's Office of Multifamily Housing Programs, and also worked for over 7 years at the Community Development Financial Institution Fund at the U.S. Department of Treasury. So Mark has a lot of experience and we lean on him a lot. So thank you, Mark, for joining us today and sharing your experience and your knowledge here. We're also joined by Amy Wilson, who's Amy Winston, forgive me, Amy, who is the Senior Vice President of Public Policy at Coastal Enterprises, Inc., a Maine-based community development financial institution with a mission to build just, vibrant, and climate-resilient futures for people and communities in Maine and rural regions by integrating finance, business expertise, and policy solutions in ways that make the economy work more equitably. As CEI's Senior Director of State Policy, Amy leads policy initiatives supporting the organization's strategic objectives to expand economic opportunities, create good jobs, and support environmentally sustainable enterprises. And Amy, I just appreciate, again, that we also lean on you quite a bit. So your willingness to share your time and experience in this conversation is truly appreciated. So I'm going to just open up the floor to Mark for you to start the conversation and give us a picture of what's going on today.
That's great. Thank you, Nadia. And it's a pleasure to be here with everyone today. Can't say it enough. We heard loud and clear we need more policy and advocacy engagement. So we definitely, as Nadia was stating, want to meet those needs this year and continue to be a good partner for you here in DC. So I'll talk about what's going on the federal policy front, since that's my day job. And then we're going to get to hear a lot from our local partner, Amy in Maine. And really talk, I think, as well about the importance of state policy advocacy and what that can look like and how that can be impactful for practitioners in state. Next slide, please. Great. I'm going to spend around 15 or 20 minutes, no more. I think Amy's going to be doing the same. We definitely want to save some time for questions because I think we see the highest value of this webinar being able to engage directly with you all. If there's any questions we can't answer, we'll be sure to keep a notes of those and we can respond afterwards. So I'm going to just spend a little time real quick, just give a little commercial about LISC if you don't know us. What's going on legislatively this year, which is quite a lot. What we anticipate the administration might be up to. And of course, can't talk now without mentioning our Section 4 advocacy campaign, which just kicked off recently. Next slide. Okay, so yeah, like you heard from Nadia, Rural LISC is an important part of LISC, and it helps shape our overall policy agenda. The LISC policy team, every 2 years, we reboot our federal policy agenda with a larger refresh when there's a new administration. But we have quite a few proposals and a special call-out document that are specific to federal policies that we think would be most impactful in small towns. And I'll go over some that are actually moving right now. As for our Rural LISC policy activities, we want to identify gaps and feedback from practitioners to make changes to existing programs. We want to amplify those priorities to the Hill, build relationships with our federal partners, and really engage in industry-specific sector events and continue to support local advocacy when partners are here in DC. So we always want to be a good support and see this as a part of our national mission to support our community-based partners. Next slide. Okay, we'll go over a little bit what's going on the Hill. Next slide, please. So we've had a challenging, obviously, last year, but at the same time, we had some really good wins. We may have some more potential wins on the horizons, fingers crossed. So but it's also dependent on your advocacy. I think that's something we're going to stress, probably Amy and myself throughout this, is that, only way we get things over the finish line here in DC is not by the LISC federal policy team going into meetings, but ensuring that your voice is there for folks in your district or representing your state. So I'm going to talk a little bit about appropriations, some affordable housing bills, some CDFI legislation, and the Farm Bill. Next slide. Okay, so we're square in FY26 appropriations. After the longest government shutdown, almost every spending bill got across the finish line, except for the Department of Homeland Security. So that one's still outstanding. So we actually have a partial government shutdown right now for the agencies that are under DHS. The president's going to give his State of the Union soon, and that's traditionally around the time where they submit their budget request to the Hill. It's just a request, it's not binding, but it formally kicks off the federal appropriations process. So we expect that might come in early March. We think it's going to be more of the same. We're going to see large cuts suggested to federal affordable housing and community development programs. But remember, it's just a budget request. Congress ultimately decides spending levels for federal programs. And since we still have the filibuster rule in the Senate, right, where you need 60 votes to make anything to a public law, including a spending bill, it does require bipartisanship. And we'll talk a little bit about that, about how that worked out for last year, for the first year of the Trump administration. Earmarks, we think, will continue in Congress, but there may be continued stipulations on nonprofits applying. We've seen those before in the House. So if you're a community-based organization and you want to work with your member of Congress to potentially get what they call congressionally directed spending or an earmark, just keep track of some of the new rules. We'll see that language pretty soon. And members are already starting to release earmark request forms even in advance of the House and Senate putting in rules. But the House has historically, or at least recently, kind of precluded nonprofits, although sometimes nonprofits work through cities or other public entities. So there's a way to work on that as well. We can talk in more detail offline. Next slide. Okay, so here's the good news. We had a very tumultuous year last year, right? We saw a lot of instability in the federal programs that are important to our work. But at the end of the day, pretty much every federal affordable housing and community development program went to what the Senate said. The House, where you can pass a bill on a partisan basis, made deeper cuts to almost all programs. The Senate, though, generally restored all of those and sometimes increased it. So if you look at this for our partners or our programs at USDA Rural Housing Service, you can see generally the Senate figures are what prevailed. And we think that's pretty good news. We think at the end of the day, that means there's not an appetite on the Hill in the legislative branch for the deep cuts that the administration wants to see these programs. Next slide. The same holds true for HUD and for Treasury, right? For the first time, I think any of us can ever remember, our only block grant for affordable housing, the home program, was zeroed out by the House. But you see that ultimately, oh, actually the number's a little wrong there. It should say zero under the House figure. Essentially, the Senate held true and flat funded the program, which is a win in this environment. We also got a huge win, and we had a modest increase to the Section 4 program, right? Our largest and most important capacity building resource for our community-based partners. Because of the advocacy you all engaged in, especially when we had some terminations earlier last year, I think we took a bipartisan program and made it even more bipartisan. And so we were very happy to see that Congress provided that additional money. The Hill also really rejected this rental assistance proposal to block grant it all to the states for tenant and project-based assistance that never got any legs here. And for the CDFI fund, which has been under attack at least 3 or 4 times since the new administration started, we see level funding. We see strong commitment from the Hill to continue the CDFI fund. Next slide. But again, that's all dependent on advocacy. So and there's a lot of advocacy that went on with Section 4, with the CDFI fund, the home program, and others. So let's keep it up. So we have some pretty good news, right, on the funding side. Now, and Congress also can pass laws. It doesn't do so much anymore for the programs that are important to our work, but every so often we have these opportunities, and this may be one of them right now. So essentially what's been going on is that the Congress hasn't done much on non-low-income housing tax credit affordable housing programs since 2008, since the Great Recession. We've seen increases in the credit, which we're really grateful for as our most important resource for preservation, new construction of affordable rental housing. But all the HUD, the USDA rural housing programs have mostly kind of been on autopilot for quite a long time now. So late last year, the Senate, on a bipartisan basis at a committee, and overwhelmingly on, we'll talk about it in a minute, in the House, the Senate passed the Road to Housing Act. This is a really good bill, in our opinion, and has a lot of things that would be really important for rural communities. It modernizes, which I think is very overdue, the Rural Housing Service. Their legacy financing programs have a quirk in the law that says once a mortgage matures, a subsidized mortgage, multifamily mortgage, you lose your project-based rental assistance. That's not good for the tenants. That's not good for the owners, and it makes it much harder to recapitalize and preserve those properties. So there's some common sense fixes in that bill that would really catch up USDA where HUD was in the late 70s. We see a reauthorization we worked on in the home program, a great program, but relatively hard to use often in practice. There's a lot of great streamlining provisions in this. A new home repair program. LISC, Rural LISC, and our partners are doing more home repair activities as construction costs increase and subsidy stays flat. We want to keep people in the homes that they already have. Those are their largest asset, and they need to live in safe, habitable housing. This is a great program modeled after a bipartisan program in Pennsylvania. We also see that we've formally authorized our only long-term disaster recovery program, CDBG-DR, making it much quicker. Right now, it takes over 2 years for funding to get to communities after a natural disaster. That's way too long. We see the Community Investment and Prosperity Act that would allow banks to make more investments in new market tax credits and LIHTC. We've expanded those, which we'll talk about, but we still have the same investor base. And we see a lot of streamlining provisions for environmental reviews. So this didn't get across the finish line. The House, the Financial Services Chairman, French Hill, wasn't yet ready. But next slide, let's talk about what he did. All right, so the Senate, they passed theirs through tried to attach it to the defense bill just to hitch a ride because that was moving. It didn't go through. But the House just earlier this month passed their own bill. Now, it's more limited than what the Senate bill is. And our advocacy is really focused on making sure we get the most fulsome package through Congress because we know the needs are so overwhelming and growing. So for that Rural Housing Service Reform Act, it takes away around 90% of it out of it in the House bill. We don't have any of the preservation language. That's probably 90% of the bill. What this bill would do is just raise the 504 home repair limits, which is important, make some modest changes to some of the direct loan programs, but we don't get anything on the rental side. The home program is reauthorized, and we have a lot of important streamlining provisions here too. The same with allowing banks to do more investments, but see all the ones that are missing? No home repair program, no CDBG-DR fixes, no permanency for the RAD program, one of our few ways to preserve legacy HUD financed programs. We do have something that's in the House bill that's not in the Senate bill, allowing CDBG entitlement communities to use up to 20% of their funding for new construction. We do support that. But the Senate bill has a lot more provisions, and that's what we're hopeful that will get negotiated at the end of the day, that a lot more of what the Senate had will be married together with some of the great language we have in the House bill. But again, if any of these resonate with you, hey, I use the home program, or hey, I've had a lot of headaches trying to preserve RHS housing, working through the state offices, let's get in touch. I'd love to connect offline because this is a hot potato right now. This could move in the next couple months. Next slide. So we'd love your advocacy. Okay, so our priorities, we want to get this housing bill over the finish line. We want to see it get done by late spring, because what's going to happen here in DC is by late spring, the midterms are going to heat up, and then there's not going to be a lot of legislating. And then we may have to wait till the end of the year till a lame duck. So we want to try to move things while we have some momentum. So our priorities, we want that RHS, the full RHS Reform Act to pass. We want this home repair bill to pass. Next slide, please. We got great wins on the tax credit side and some retrenchment as well. You can't talk about the tax bill last year. We're talking about wins, but also a lot of losses. On the win side, we do see the largest increase in low-income housing tax credits probably in the program's history. We have an increase on the formula credits, the 9% credits, and I think really importantly, on the 4% side, on the buy right credits, a reduction in the amount of bonds that are needed to finance affordable rental housing to trigger those buy right credits, going from 50% to 25%. So if all of that is used for affordable housing, that could be over 1 million more units over the next decade of affordable rental housing. But Congress left, because they did that through a reconciliation bill, a revenue-related bill, there's a lot of other provisions in the larger LIHTC bill that we would love to see still get across the finish line. And we've got a few here that are really pertinent to rural and to Native communities, allowing them to have an additional basis boost for those properties. We know, right, that LIHTC and pricing can often also be lower in small towns because they're not in CRA assessment areas. So there's a lot of other great things Congress could do with the low-income housing tax credit. We want to also see, finally, dedicated subsidy for affordable home ownership. For our practitioners that are on the call, you don't need me to tell you this, right? But we don't have anything like LIHTC. LIHTC's baked into the tax code, and we got great increases, but we don't have anything to really support on a dedicated basis groups engaged in affordable rehab, homeownership rehab, or new construction, especially in economically distressed communities. And that's what the Neighborhood Homes Investment Act is. We've got a great website. If you Google Neighborhood Homes Investment Act, it'll show you, based on the bill, all the communities that would qualify. There's some more flexibility built into the language. And this is a modest tax credit to primarily cover appraisal gaps, where the cost to rehab or construct an affordable home exceeds its value, its sales value. Next slide. And we do know that this would overwhelmingly benefit rural communities. So that's what's going on. So appropriations, got good wins in 26, waiting for 27. Got a great chance of getting some great streamlining provisions to affordable housing programs. Awesome. And then we had some good wins with some losses in the tax bill. Now, what's going on the CDFI side? This has kept a lot of us busy, and I think you'll probably hear a little bit about this from Amy as well. We have just seen a lot of, since this new administration came in last year, just as I was mentioning, a lot of attacks on the CDFI fund. But the way I would kind of think about it is that while the administration is not in favor of CDFIs, and has been holding money and making its some of their operations much slower, Congress really likes CDFIs. And in fact, when the latest kind of attack on the CDFI fund took place, over 105 Republicans on a bicameral letter from the House and Senate, because of your advocacy, said, we support the CDFI fund. That's really amazing. And it's not just moderate Republicans. There were very deeply conservative Republicans aligned with the administration that signed that letter. And I think that really shows you the broad reach of the sector, having over 1,400 groups throughout the country providing affordable credit and financial services to low-income people. Okay, so that's what's been going on, right? We've had the Hill really step up and keep the CDFI fund in place, but we're still having a lot of delays from the agency. Congress also, when they passed the Road to Housing Act through the defense bill in the Senate, again, it didn't go through in the House, they said, there's a variety of other things we can do to increase the impact of CDFI programs, kind of similar to the Road to Housing bill in the House bill. There's a part of the CDFI fund's authorizing law that allows for liquidity assistance for CDFIs that are capital constrained, so they can sell assets to do more loans. And we worked on a bill that would modernize that, and that's what that CDFI secondary market check is. The Native CDFI relending program, a huge success out of USDA, taking their 502 direct money, giving it to mission-based Native lenders who have relationships in Indian country in their community to be able to support homeownership for those families. That has been the only way we've seen 502 direct money go straight into Native communities. And that's been going on for years by appropriations language. So let's bake it into law. The bond guarantee program, a really important source of long-term debt and capital for CDFIs, but it can be difficult for smaller to medium-sized groups to absorb the amount of money that's currently set. This would lower that. And so there's a lot of common sense reforms and streamlining provisions. Again, didn't make it through the House, made it through the Senate, but we know the Senate's going to be pushing for this again, that they're going to probably put out a standalone bill. And we need organizations, again, to go to the well and say how important these would be for you. And if you need more information, we can provide that. Next slide. All right, the Farm Bill. I know this is a lot to absorb, and I'm almost done, and you'll get to go to the star of the show, Amy. And the Farm Bill is a 5-year bill. Unlike appropriations, which we gotta ask for every year, this is more similar to like the transportation reauthorization. Every 5 years, Congress has to pass a Farm Bill. It sets commodity insurance programs. It sets food assistance programs. A lot of that, though, was already done in the Republican tax bill last year. So we're gonna have a smaller Farm Bill that needs to pass. This has some bullet points of what we're pushing. I think most pertinent for this crowd is the Rural Prosperity and Partnership Act. We've worked on a bill that would authorize the new capacity building and community economic development program. The House just released their Farm Bill. Unfortunately, it was not included. So we're going to continue to see as the Senate starts thinking about their Farm Bill priorities, we can get it in there. And then we would have to probably fight for money each year, but love to see additional assistance for our rural partners. Next slide. Next slide when you get a chance. As that's advancing, I already know what's on the next slide, so I'm going to start talking. The next slide gets into our Section 4 advocacy campaign. Oh, I was wrong. Next slide, please. This is the administration action. All right, I got to do the bad news before the good news. For the administration, we do expect, again, for the budget request, more cuts. We continue to believe, and we're seeing, that the administration is going to slow walk funding. We've really seen this with the CDFI fund. They use the term impoundment. Eventually, there's going to be a very key case that goes before the Supreme Court, testing the limits of the Impoundment Act. They have not yet fully ruled on it. This is impacting our sector, though, right? We have FY25 money from the CDFI fund that's still sitting there that needs to go out this fiscal year. We also believe that one of the largest impacts of this administration is going to be the reduction in the career civil servant workforce. We've seen 30 to 40% reductions at HUD, at rural development, at the CDFI fund, at Treasury. And this is impacting their ability to get out funding notices, make awards, and deal with compliance and transactional issues. We've talked a lot about the fund. Right now, we don't see new funding notices outside of new market tax credit awards, which we're grateful that were released, but we'd like to see their appropriated money, their grant dollars go out. We know that there's going to continue to be widespread regulatory rollbacks. We've seen those already this year. Continued reductions in fair housing regulations, and additional work requirements that HUD and others are going to try to impose on federally assisted tenants. For the Community Reinvestment Act, we still have the 95 rule in place, and that's where we want to keep it. After some fits and starts to be able to come up with a new rule, it didn't get across the finish line. So right now we're at that rule, and that's fine. It still has a lot of very, very important direction for banks to make both investments and grants and loans to community development partners and to projects. Next slide. Okay, this is what I want to talk about, the Section 4 advocacy campaign. Next slide, please. Okay, so I think most folks are familiar with the Section 4 program, and I think a link was put in the chat. Yes, thank you, Natalie. So every year, we have to go educate Congress on the need for additional Section 4 resources. And we just got a $4 million increase. Doesn't sound like a lot, but on a $42 million program, that's over 10%. That's a lot. And so we want to go back to the Hill. We want to remind them of the importance of this unicorn and gem of a program that provides flexible capacity building assistance to nonprofits, right? We don't have anything else like this in the federal suite of tools. Most federal subsidy programs are for projects. This is an investment in an institution, right? To respond to needs in your community. It's not prescriptive from Congress. It's not prescriptive from LISC. And you can see over time, over $45 million has gone out from the Rural LISC team to rural partners through the Section 4 program. So we got a great win in fiscal year 26, and we're going to ask for $50 million, which is a little shy of an inflation-adjusted amount. LISC, Enterprise Community Partners, and Habitat for Humanity are the three authorized eligible intermediaries for this program. Next slide. Okay, so this is where the link comes in. One of the most powerful tools we have in our request to Congress is our organizational sign-on letter. Last year, we had a record. 1,426 organizations vocalized their support by signing on to this letter for Congress to provide additional funding for the Section 4 program. For one of the smallest programs at HUD, that's tremendous, and I think really speaks to its impact and its flexibility. So we've got a live request out right now, and you may have received it from your Rural LISC team. If not, Natalie put it in the chat, and we'd really encourage you to share that. Sign on, share it with other community-based partners that you know this program is important for. because we need to get as many signers as we can, especially by March 2nd. Next slide, and I think that's the last one for me. I think I want to mention real quick, we have other advocacy with the Section 4 program. That organizational sign-on letter is number one. That's the timely ask right now, but we're going to be working through your Rural LISC staff as well to provide you other support letters and materials during the next couple months where you can engage Congress. One of the tools we use is it's called a Dear Colleague letter. It's where members of Congress write each other in support of something. Last year, we had 104 House members on a bipartisan Dear Colleague letter for the HUD Section 4 program. Really amazing. Again, for one of the smallest programs at HUD, 41 senators on a bipartisan letter, right? That's over 40% of the entire Senate vocalized their support. So we're going to need your help again, making sure that we have a robust signers, and you'll be hearing more about that one soon. Next slide. Okay, and this is what you can do. You can continue to partner with us if any of this resonates. I'm going to put my name and email in the chat for appropriations, for Section 4, for these authorizing bills. We want to get over the hill. Please partner with us. We have tons of advocacy materials. We'll set up meetings for you virtually or in person. And we always encourage folks to meet with their congressional staff locally. Just go get a cup of coffee with your district office staff or a Senate office staff that's in your neighborhood. That way you can tell them about the importance of your work. And then also that the first time you don't communicate with them is an ask, right? That they have an understanding, a baseline understanding of the important work you're doing in community. And with that, I think I'm turning it over to Amy. Thanks.
Hey, thanks so much, Mark. My head is spinning and all that is really, really interesting, and I'm learning a lot through you and with you. I want to thank all of you at Rural LISC for inviting me to participate today. We had a really fun call to talk about this, and I'm really been looking forward to it. Mark, I met Mark maybe a little over a year and a half ago. Most of you probably know Laura Buxbaum, whose place I've taken at CEI, and she is a federal policy guru, well, a federal and state policy guru, and she told me to reach out to Mark, and I was thankful that I did. So I encourage everybody to take him up on actually a cup of coffee with him, because I spent an hour on the phone and learned so much. So I'm really excited to share CEI's policy work, and really want to be clear from the start that I don't think I am the authority or the expert, and I couldn't do this without being in coalition with some great people in both our federal and state coalitions. So in the next few minutes, I just want to quickly introduce CEI to those of you who don't know us, go over a case study to illustrate our state level advocacy, which is where I've really been largely focused for the last 8 years, and how that really illustrates key elements in an effective campaign, advocacy campaign, and also just provide an overview and some context for CEI's current priorities for our current state legislature and where we're engaged federally. And I love all the detail that Mark just provided on that. So if you want to go to the next slide, I'm going to breeze through the next 5 slides. Here's CEI. We're literally lifting that person in the picture, an economy that lifts people and communities. Next slide. There's just some impact. I'll let you read that. And the next 2 slides are our vision and mission. So we are a CDFI that finances and advises businesses, and we have always maintained a strong commitment to policy. That is the 3rd leg of our community economic development stool. So next slide. We are a chartered NeighborWorks member. We're a certified CDFI. We're part of Opportunity Finance, and you can see that we have an ARIS rating. So next slide. Apologies, I forgot I put so many in. Here's just, I like the pictures they have that illustrate some of the projects that we do. This is a hops farm in northern Maine. So next 2 slides, just mission and vision. I think Nadia included in my bio what our mission and vision are. So if you want to, that's a farm that's not too far from where I'm sitting that looks very different than it looks here today because it's a whiteout outside my window. But that's in Midcoast, Maine. Next. And there's our mission that I believe Nadia read, so I won't read it back to you. Next. I'll just take a moment here to talk about sort of quickly the elements of sort of effective state house advocacy, and believe this applies to the federal level as well. So, you start with a good idea. You have clear messaging that appeals rational, it's rational, and it has some emotional appeal. Understanding the legislative environment is key, knowing sort of who to talk to about what and when, and having a coalition of stakeholder support. So both elected officials and like-minded advocates. Next slide, please. The NCSL is the National Council of State Legislatures, and you can find your state's legislative calendar there. This is sort of a little bit of a how-to, and it might be a little bit too basic for folks, but I just wanted to not assume that everybody's deeply engaged in state policy the way I am. And yeah, so you can find your state's legislative calendar there, or Google your state legislature's website, and you can look at what the path of legislation is and what the timeline is. Usually there's two set. Maine has a long and a short term, and it's a 2-year legislative cycle. We're currently in our short session. And the procedures and the terminology really vary from state to state. So you need to just get familiar with what the language is in your own state. Bills, they're filed at the beginning of a session. That's sort of at the beginning of the 2-year cycle. And there's some exceptions. There are some after deadline allowances, and some the departments or the governor can do something. And there's like after deadline, and there are some second session bills that are allowed in. They're usually emergency or budget related only. And once the bill is assigned to a committee, it has a public hearing and a work session, and then it goes to the floor of both chambers for a vote. It loops through each chamber twice, and it can be amended on the floor. This is where you would have an opportunity to, you could have like an opponent might try to pass the minority report or a different version that came out of committee. So I say that to say it's really important to have a unanimous bipartisan bill coming out of committee. That just really helps get something through the legislature in an efficient way. Often if you have a unanimous bipartisan bill, when it's voted on the floor, it is voted in what they call under the hammer, and they will suspend the rules for a second reading, and they won't have a roll call. It will just basically take a vote automatically. Next slide, please. Yeah, and every bill has its own life cycle, is something that I've learned. This is just a visualization of the sequence of like sort of who to meet with and when. So, navigating the state house, it can be done in a different order. I've sometimes met with leadership first. Often you find a champion first, you build a coalition. For example, a bond bill that we're working on this session, we actually checked in advance with the governor's office to make sure there would be no concern about that. And yeah, you talk to committee leadership, and often with the 4 legislative corners, both majority and minority leaders. And yeah, so that's kind of just the components of a good campaign. Next slide, please. Yeah, so I wanted to share with you an example, sort of a case study, if you will. My own approach, like as I've been an economic development practitioner and community organizer, and then also moved into this policy sphere. And it's really been very network centered. And that dates back to my time. I'm actually trained as an anthropologist, so I did some ethnographic field work in Eastern Kentucky. My interest and my focus has always been in rural areas and rural development, and really like grassroots, how the grassroots and people in local communities shape policy and economy. So and that's where I was first introduced to the world of CDCs. It was all through participatory development. So I think the most advocacy, it happens through networks and coalitions. Mark made this point. So driving it home, historically, like we have built one where none exists. So like when I came back to CEI in 2018, we didn't have a CDFI network or coalition. And I asked Laura, like, well, why is that? You know, could we have one? Is there an opportunity there for us to work together? And so that became sort of an aspirational work plan goal. And in 2023, CEI started a fellowship program for early career folks. And Laura and I got a fellow, and we sort of studied the opportunity. And we studied sort of like what other states had coalitions. We talked to OFN. They were starting to work with state coalitions. We drew our peers together, and we presented research that we had compiled on different models of state coalitions, their activities, their goals, and their accomplishments, and even looked at those that had some existing state level funds. And that had all surfaced in our interviews. And we pulled the network together in December of 2024 and hosted a meeting. And for those of you that know Leah Freeman from Bridging Virginia, she came up and talked to us about the work that they did in Virginia and some of the work at the other coalitions. And I have to give props to the folks at like Michigan and Ohio and Washington and other places. They've really helped us learn a lot about, and we extrapolated it to Maine, of course, but we really learned a lot about sort of what we could do. And we had other, of course, examples of coalitions that we work with here. And I'll show you those in a moment. I think they're on the next slide. So yeah, we talked about peer-to-peer learning. We talked about joint advocacy, and we even sort of talked about, could we do a state fund to leverage the national fund and provide more capital for us to lend and invest. And so we talked about a potential sponsor, and I think this is going to illustrate those steps that I showed in the last couple of slides too. And just based on this legislator's past experience and interests and sort of influence. And so I called her, and she was very interested in sponsoring a bill for us. And very intrigued by our new network, and sort of knew a little bit about what CDFIs did and really wanted to learn more. She asked us for bill language and a rationale, and things were tight. It was just before the legislature was starting. It was before the bill deadline, but it was well into holiday season. Everyone was closed. There was a deadline, which is called cloture, for bills to get in. And so just before cloture, she submitted a title and some draft language that I had sort of pulled together, but we really, we needed to reach out, and we still to the Department of Economic Community Development, the state treasurer, the Finance Authority of Maine, the committee chair, the likely committee where the bill would be assigned. And really, our coalition had to have a robust discussion about whether to move forward, because this was sort of an idea that came up, and we had all already set our priorities for that coming legislature. And a shift meant, you know, really a shift in focus, a shift in energy, in time. And we really wanted to, if we were going to do something, we really wanted to do it well, right? We wanted it to be a win. Although a lot of time it takes multiple legislatures, and you do need to lay the groundwork and start a conversation. So basically we decided, we had thought about asking her to carry it over. And when I broached the subject, she really reflected back to me like, this was the shiny, happy bill. There was an opportunity here that we wouldn't want to wait on, and we wouldn't want to miss. The administration in the state was going to change. The legislature was going to be, you know, we had one more legislature to work with. So we revised the bill collaboratively together. We really leaned on the federal fund, and we followed up with the state agencies, and we worked with the sponsor to curate a list of sponsors that were co-sponsors that were geographically distributed across our state, that were in legislative leadership, that were on the committee of jurisdiction and appropriations. And we tried to be really strategic. And when it came to the public hearing, we really tried to draw from sort of allies, borrowers, and clients and folks that wanted to help tell the story. And we had a range of partners at other entities like Maine State Housing and so forth that really stood up and talked about the importance and potential of this bill. And there was no opposition. So we had to stay pretty vigilant. We saw some, like, the language didn't come out exactly right. There was potential for it to be misinterpreted. So we worked through the committee process with that. And then we also were asking for $500,000 for this fund that would go in the State Department of Economic and Community Development. And in the end, when the fiscal climate was really shifting, we requested that appropriations strip that request and really just pass the program so that we would have this program set up for future opportunities for funding, and we would have that mechanism for working closely with our Department of Economic and Community Development in place. And then the other part of the bill actually establishes the authority for the treasurer to invest directly in CDFIs. So that was sort of more of the, that was, I think, what we really hoped to pass. So getting both prongs of the bill was really amazing. And I think we were really able to accept, okay, we might not get the appropriations for the fund side of it right now, but we have a fund and we have this authority, and we're now working with the treasurer. The bill passed, it is law, and we're working, and the QR code on the slide, I felt pretty proud of myself for being able to do that, by the way. But the QR code is a link to the law, as there's a link in the slide too, but that way you can find it. And that we're now working with the treasurer to talk about next steps and how that process works. Basically, in summary, that bill authorizes the state treasurer to invest up to $10 million per year for up to 2 years at up to 2% below market rate in Maine CDFIs. There's 9 of us, I believe. It establishes the Maine Community Development Financial Institution Fund and Program at the Maine Department of Economic and Community Development to provide loans and grants to Maine CDFIs to turn around and lend and support housing and community projects and small business lending. And we are currently working with the treasurer. So I guess a couple of takeaways. This was really a sleeper bill for us. It wasn't going to be our priority, and our priority shifted both at CEI and for the whole network. We really came together around this bill and this opportunity based on sort of the ease of passage, the degree of impact, the way it will work and be synchronous with existing state systems. And it really met all of the criteria that we individually use as a criteria for, like, what is a priority bill for us and where we engage. And I can, that's a sort of separate topic. Happy to talk with anyone about how we do that. And it really illustrates the key elements of coalition building. I feel like it's a classic advocacy example. We found a champion. It's a unique and an innovative and an effectively no-cost bill. We carefully curated a sponsor list. We developed a fact sheet that we circulated. We got supportive testimony from allies and borrowers. We talked with the committee chairs and had their support, and we had support from the executive branch and related agencies to make sure they're equipped to administer it and supportive. And we have very tactical messaging about the responsible use of state funds for impactful community projects. And again, there was no opposition, which was really refreshing. And I guess I just wanted to make the point that the network building part of this project, was at least as rewarding as the legislation. Networks are really needed to pass legislation, and also this showed also how I think getting behind a piece of legislation can also help catalyze your network development too. And it's literally an example of participatory democracy and what I was introduced to in rural Kentucky so many years ago. So I think separately, building a network and working on a bill are really formative experiences, and combined, they really can be like life-changing. I've been really lucky to be part of a few experiences like this, and people who I've had close working relationships with for 20 years, and that is literally community building, right? And community movement building. So I next, if you go to the next slide, I think I just wanted to sort of close with putting this in context of just like our state and federal policy advocacy. We really do work in coalitions. So I just tried to list there. We are pretty sector focused, although we do finance small businesses across the spectrum of different sectors, and all small business, but different sizes and stages in the whole CI family. And so we're part of a childcare coalition. I'm on the policy committee. That committee shapes the legislation that becomes the coalition's priority. We have a food policy working group that we've co-convened for like 6 or 7 years, part of a green budget coalition, the Aquaculture Association. We have a scallop stakeholder team that led on a scallop bill. So we have strategic partners according to different sectors and issue areas. There's a historic tax credit group that we're a part of. For workforce bills, we're part of a different coalition. I'm the policy chair for the Permanent Commission on the Status of Racial, Indigenous, and Tribal Populations. So we really engage through that commission in a lot of other sort of workforce and consumer and justice related bills as well. So I did also list these are our priority interests. Aside from LD 1500, we have been part of a stakeholder group promoting an agriculture bond to capitalize existing programs in the State Department of Agriculture. We successfully helped pass a bill to support scallop farmers biotoxin testing to ensure their food can get safely to market. And we've been advocating hard for a childcare subsidy program to make childcare available and affordable. Tax credit incentive programs that we engaged on were expanded and reauthorized in the last session. Renewable energy, we've shifted from playing sort of offense to defense to protect net energy billing policy. And we have engaged last week, the tribal self-determination bills were up along with the child care, and the supplemental budget is currently happening. So we're trying to advocate for our priorities to be included in the supplemental budget. I feel like I've taken plenty of time and talked a lot, and I really do want to have time for questions. So I'm going to close there and give it back to Mark and Nadia.
Yeah, well, thank you so much, Amy. I really appreciate it. Obviously, this is why we include you in these conversations, because you have incredible experience and that motivation, that action of coalition building to drive these advocacy efforts is just so inspirational. I imagine it's quite overwhelming too. And so I hear you and the enthusiasm there. I do have a ton of questions, but I also want to just invite anyone who has questions to either write them in the chat or I'm not sure if this is allowed. So those of you who are coordinating the Zoom, maybe to go off mute. But as we're preparing for any questions that might be out there, I did have one thought I was thinking about, Amy, and I'll let both you and Mark answer this question. And I think it comes down for me, there's so much that needs to be advocated for, right? In the work that we do, housing driven, economic development driven, really focused on rural improvement. But what have you all have seen is the message that resonates with state and federal lawmakers, and also those coalitions that you're trying to, those entities that you're trying to build a coalition around to get folks on the same page and talking about these advocacy efforts when there's so many things that we could be pushing for. So maybe Mark, I'll let you go first, and then Amy, if you can jump in.
Yeah, thanks, Nadia. And that was really great to hear, Amy. Thanks for the presentation. I think with when you're speaking to lawmakers, it's really tailoring your message, right, to what you know is important to them. And then talking about how what you're proposing can impact their communities locally, right? Like all legislators, for the most part, are somewhat parochial, right? They want to see impacts and benefits to their district or state work or policy work or federal policy work. So when we go into an office, we really try to have good stories. We try to have materials that we can reference and leave behind. That substantiate, hey, we want an increase in tax credits for this, or spending, or we love your support on this bill, and then try to tie it to their local communities. I think that's always the most impactful. But I'll hand it over to Amy.
Yeah, I mean, echo that. And I mean, Mark, you're sort of the veteran here. I would say also leveraging of other resources. So for at the state level, we're leveraging federal resources. This is helping. And so I think that that's a really and or private market one. So and that was really important in the reauthorization at the state level as well of the new markets, for example, because that's not controversial thing too. So
Yeah, that's such a great point. That idea of like we're not asking one entity, public or private, to front this bill. We want everybody to be contributing to this incredible opportunity that might exist at a state level or federal level. I see that Chris Spalding wrote in the chat. If Mark, if you could share a little bit more about the status of the CRA.
Yeah, absolutely. And we keep a real close watch. This is probably our certainly is our highest regulatory priority, since CRA is really I think of it as really kind of the oxygen. It's the demand for a lot of the federal, or excuse me, a lot of the bank and financial service investment we see in the sector. So folks who may have been following this, is that the CRA, right, is a law, but there's also a regulation that implements it with the 3 federal banking regulators. And there's been fits and starts to update the regulation, to modernize it, to recognize where we are at this point with banking, right? That we have a lot of folks that don't go into physical branches and do things digitally, and other advancements since the current 1995 rule was finalized. There was a rule the previous folks tried to do through the banking regulators. It got litigated by a banking trade association, and essentially it was dropped when there was a change in leadership at the regulators and within the administration. So right now we're at the 95 rule. There's nothing yet in efforts to update again the rule. It's been updated. They tried to update it during the first Trump administration and during the Biden administration. So at this point, what we're really stressing is just stability. We need stability for the banking regulators, especially as there are now more low-income housing tax credits. New market tax credits were made permanent, right, for the first time. They always used to receive just little term extensions from Congress. So we're advocating that we just let the 95 rule sit. We do think there could be some updates that were made, but this isn't the time right now for those sort of changes. So right now we're at the 95 rule, and hopefully it'll stay there.
Just continuing in that conversation, as again, we're welcome anyone who wants to go off mute. I'm happy to quiet down to take questions. But I guess, Mark, just to continue, I mean, you talked about how there was some good advancement in the house related to housing and community development legislation. But what are the most important bills for practitioners working in rural communities? And, if you can give any advice on how us as Rural LISC partners and others working together can get some of these things to the finish line.
Yeah, 100%. I think of everything that's being contemplated, right? So in the non-tax credit space, where we've got these bills in the House and Senate, me personally, as the kids say, I think the Rural Housing Service Reform Act is really the most important, right? Like Congress has not paid attention to RHS. Just full stop, right? And part of that is probably because it's a housing office within an agency that primarily doesn't do housing, USDA, unlike HUD, right, which is all housing. So we've just seen their authorities really wane, right, in a way that we have not seen with legacy financed HUD developments, many of which still are also in rural communities. But we want to protect this rent restricted housing that RHS has financed, right? I mean, this is some of the only rent restricted housing in small towns. And it can be difficult to preserve from a variety of perspectives, from a financing perspective, from working with RHS, as we've seen staffing cuts to the agency and capacity constraints. So really what this bill is doing is not saying, hey, Congress, give us a $30 billion grant or whatever it would be to recapitalize this really important housing. It's saying, hey, we know what we can do here. When you have a long-term project-based rental assistance contract, you can take that to the bank. You can underwrite to those rents and you can leverage private debt and equity. It's not a panacea for the whole stock, but it's probably the best we can do politically in this moment. And so if folks are not read in on that bill, again, follow up with me. I think that one's great. And I also think the home repair bill, it's relatively modest. It's just $25 million, but it's an inroad to recognizing the importance of home repair activity, which has always been a bread and butter part of this sector. But I think is even more important right now, where we're seeing declining home ownership rates, especially for low to moderate income households. And so we would really love to see, this kind of what it does basically is a one-stop shop, right? Because what we find often, I know folks, I feel this on the call, low-income homeowners, they try to go get like weatherization assistance program funding, but they're told they have, roof issues or habitability issues. And so they can't get those dollars until they take care of that. But they can't take care of that because they have deferred maintenance or on fixed incomes. This would be the money, to Amy's point, small amount of money, fix those safety concerns, and then go leverage other public and private dollars.
Just one last question, I think, and then I'll give each of you a chance to just share a minute, last comments. But maybe Amy, maybe we can just lean in a little bit on your experience. Mostly we discuss state level work, but how does CEI decide on any federal advocacy work that you work with your coalitions to support and get engaged in?
Really, we are part of certain coalitions, and so certainly appropriations is something that we do routinely, and we really try to work through the coalitions to see where like the programs we actually use and depend on and rely on to leverage these other resources and make these projects that show the impact that legislators at congressional delegation and state legislators like to see the impact of, that like Mark was talking about. We're participating in policy summits and in coalition conferences, and we're, coordinating with, as part of like coalition policy committees and so forth, to, assess what are the high priority and then really work together on the ask and then tailor that to sort of, these are the programs that we use and this is why these are important in Maine, in rural areas where we work.
Yeah, that makes a lot of sense. Well, I know we're coming to time, so I appreciate everyone's attention and participation in this. I'll just give you, I guess, 30 seconds each to share any last thoughts before we let folks go.
I would just say thank you for the opportunity, and I hope people reach out. I'm sorry I didn't get to hear from all of you about all of your work and to learn what's happening and to just share. This feels like a great community of practice, and thank you so much.
Yeah, I'll echo that, and it's always a privilege to be able to talk with our partners, and please do hit me up if any of this resonates, and please don't feel intimidated by it. You don't need to be an expert in the bills. That's our job here in DC. We just want to facilitate your understanding of this legislation. If it makes sense for the work you do, then we're happy to help you advocate for it. You don't have to come to DC. We can set up virtual visits and things that are really easy. So thanks again for the time.
And I would just also echo that as well, in the sense of Rural LISC staff and our team at LISC are all interested in hearing about what sort of advocacy effort opportunities and changes that we can also help drive forward. So please don't be shy about sharing questions, concerns, thoughts, and opportunities. We are here to help. So thanks everyone for your time. Thanks again, Amy and Mark.
Thank you all so much. Nice to see everyone.
Take care.